Welcome to the Scam Economy with your host, Matt Bender.
It's episode 25 of the Scam Economy, and boy, do we have something for you today for this milestone episode. Folks, this episode led to some breaking news. That's right, let me give you a brief breakdown. This episode's going to start a little bit differently than other Scam Economies. Going to bring you behind the scenes here so you can see how the scams are made, I guess. But here's the deal. This is what happened this week. So this angel investor on Twitter basically had a viral tweet thread earlier this week about the decentralized wireless network Helium. And so I invited him on the show to talk about Helium. And he agreed, and that's the interview you're going to hear shortly. But in researching for this episode, I came across something interesting about Helium, and let me give you a little bit more about Helium really quickly. So basically, it's a company that's trying to be a network for Internet of Things. The idea is that, for areas where there's shoddy or spotty Wi-Fi service or even 5G, Helium's network will fill the gaps. And their hope is, one example me and Liron use is if you're walking your dog somewhere in the woods, and your dog gets away, gets a little bit ahead of itself, and it's wearing a GPS collar, thanks to Helium's network, ostensibly, you'd be able to track your dog even if there was no Wi-Fi or bad 5G service. You could use it for your Ring doorbells, your smart refrigerators, whatever. You're probably asking now, okay, Matt, this is Scam Economy. Where does crypto come in? So I just explained to you that Helium's main product is this wireless network. But in a recent profile of Helium by the tech newsletter The Generalist, we found out that there really aren't customers for Helium's network. Apparently, it's only pulling in around $6,500 a month in revenue. Again, this is a company that has hundreds of millions of dollars in funding and is currently valued at over $1 billion. So, main product is the wireless network. Turns out that doesn't have many customers. But we do know that most of Helium's revenue is actually coming from budding entrepreneurs and, business hopefuls who buy the hotspots from Helium in order to expand Helium's coverage. Basically, the idea is, your dog's GPS collar would ping the closest hotspot box owned by one of these people who bought Helium's hotspot. And why would they buy this hotspot? Because they get to earn Helium's own cryptocurrency token. And I think you know where this is going, obviously. They only earn that crypto if Helium's wireless network actually has customers who are using the network and pinging that hotspot box. So, I'm doing the research and things aren't adding up numbers-wise because I'm looking at Helium's website and, one of the big companies they tout, a logo on their website is Lime, the scooter rideshare company, who told me there's been more than 300 rides worldwide. This is a pretty big company. If they're, if they're working with Helium to apparently GPS track their scooters, you would think that data was being used. So I'm looking around and I'm noticing that, Helium has talked about Lime a lot. In the New York Times, they received a glowing profile earlier this year. How Helium was called maybe one of the first good use cases of crypto. And the number one client of Helium that's mentioned, the very first one to be brought up in the piece, is Lime. But again, I'm looking and I'm not seeing any reciprocation from Lime declaring that they use Helium. It's all coming from Helium's side. So before I record this episode with Liron on Wednesday night, I reach out to Lime. No expectation really. Maybe, they are using Helium, or, they were a customer for a while and maybe they're just not now, or, maybe they were just rolling it out on a few scooters, and wasn't something to announce quite yet. But right after Liron and I finished talking, I checked my email, and there is a response from Lime. And according to Lime's Senior Director for Corporate Communications, Russell Murphy, Lime says that beyond an initial test of its product in 2019, Lime has not had and does not currently have a relationship with Helium. So Lime is claiming that they never used Helium in a working capacity, yet on Helium's website, on its homepage, Lime's logo is right there at the top for Helium is used by, and there it is, Lime. And then over on their enterprise page, it says Helium is trusted by, and right there, Lime. Because of a 1-month trial back in June 2019 that I've since confirmed was just a trial with their contact at Lime, who is a former operations manager there. He doesn't work with the company anymore. Didn't go beyond that. He was their main contact. June 2019 is basically where this all took place. There was no contract. There was no payment exchanged. There was just a test of putting these Helium GPS tracking devices on Lime scooters to see how it would work. And nothing ever came out of it. And that was enough for Helium to bring up Lime in Reddit posts, in Twitter posts, on its own website, in videos, in press coverage ranging from CoinDesk to Axios to the New York Times and who knows where else. And so I wrote up the piece. It was just published today in Mashable. The link is in the description to this episode. Definitely check it out. It's already getting tons of shares and coverage and, nice things being said about it by all sorts of people across the spectrum in, the crypto world, the tech world, in journalism. And I'm saying this because I want to thank all of you, the Scam Economy listeners, and especially the Scam Economy patrons who subscribe and pay to support this show at patreon.com/MattBinder. I was able to find this out due to research directly involved with this very episode you're about to listen to of the Scam Economy. The article's already made its way to Helium's official subreddit, where it seems like those, budding entrepreneurs who laid out hundreds and hundreds of dollars for a Helium hotspot are very upset at the misrepresentation of Helium's relationship or lack thereof with Lime. Some even saying that was the reason why they even got involved with Helium. I think there'll be a lot more to discuss here. I'll likely, I'll obviously stay on it. Maybe there'll be a whole Scam Economy episode just on the details in this piece, which again, you should all go check out. But, I had to hold this show. You might notice if you listen on release day that it's, a little late, but I had to hold on to this interview, which is still great and completely timely. There's nothing out of date here, but I could not release this episode without adding in this extra information that's directly related to everything that myself and Liron are about to talk about. And without anything further to say, joining me now to discuss Helium is Liron Shapira. He is an entrepreneur, angel investor, and crypto skeptic. Liron, thank you so much for joining me today.
Great to be here, Matt. And I'm also an avid listener to all the crypto podcasts, including yours.
Oh, thank you. I appreciate that. Yeah, there's not enough crypto skeptics in the world. And, you in your position as, an angel investor, I know there's a few other voices out there, but at least publicly, not many people in the space, are so openly skeptical at the very least, or critical of cryptocurrency, Web3, the entire blockchain industry. And so, I've seen a number of your, work on in terms of like your writing on it on social media, on Twitter previously. But then I saw this Helium thread and it has gone very viral. And I had personally myself become, I first became aware of Helium. I might have come across it here and there before, but I really sort of understood what it was and what they were trying to do with it when Kevin Roose of the New York Times wrote about it earlier this year in February as cryptocurrency finally finding a use case. I think we'll debunk that perhaps in this episode. But why don't you first start, I guess, with telling me a little bit about what Helium is for people who aren't familiar.
Yeah. So Helium is, a Web3 application, as they call it, and it's often touted as one of the most popular use cases of Web3, right? So when people ask, what's a use case? They're like, well, have you seen Helium? It's going to be amazing, right? It's really one of the go-to answers. And so the pitch, as I understand it, is it's going to be a way for Internet of Things devices, like maybe, a smoke detector or something that you stick like in the forest. This is an example from investor Kyle Samani, to detect if the forest is starting to get on fire. That could be like an Internet of Things device. So you take these network devices and you need to give them an internet connection. But 5G is too power intensive, so you don't want to connect them to a 5G cellular connection. And they're too far from a Wi-Fi hotspot. So there's this happy medium. It's called LoRaWAN technology. It's a relatively new technology, and it's supposed to be low power. Their brand of LoRaWAN that they're pitching is very slow. So you can see I'm already getting into the weeds a little bit. It's a little bit hard, but the idea is you can connect devices to the internet over something that's kind of like Wi-Fi, kind of like 5G. It's in between, and it's going to be powered by a worldwide network of hotspots that are broadcasting this signal, and it's going to be like a pay-per-usage model. And even though I'm making it sound kind of hypothetical and hand-wavy, there's actually, last I heard, 900,000 of these nodes deployed around the world. So I'm actually talking to you after the plan is kind of cranked out, after $365 million has gone into this project. This is supposed to be like a mature time for the project where supposedly a lot of people are supposed to be on the network by now.
Right. Now, You just I actually listened to that segment that you posted. It was about like 7 minutes long of you talking with that investor in Helium, and you both talked back and about he was very adamant that this was everything you just mentioned about connecting for like dog collar tracking and like the forest fire thing. I mean, he was adamant that was a use case, and you guys were talking it out, and I'm thinking to myself, like, as I'm listening, I'm like thinking to myself, like, all right, that is, I guess, what Helium, the company, is presenting itself as in terms of like the use cases for it, for like normal everyday people to sort of, I guess, understand what the purpose of it is. But none of that is Web3. Like none of what you just mentioned, like Internet of Things is not Web3. Web3 involves, minting a token on a blockchain, something being put on a blockchain. It's something connected to a token that's on a blockchain. And, the idea is that, maybe one day our social media identities will be attached to our crypto wallet. And that's because that's, stored on, our identity will be stored on the blockchain in that way. So where does the actual Web3 crypto part of Helium come in?
Great question. So a couple places. So I guess it comes in with, there's a token. It's called HNT, and you get a token reward when you basically help somebody access data through your connection. You get some of this token, and you also get some of this token when you verify that other nodes are on the network. So it's like peer-to-peer verification that, hey, my neighbor has a node, and their node is gonna talk to my node, and we're gonna both verify that the other one is live and responding to requests, and we're gonna pay each other, little pieces of this token in order for doing that. And of course, the token is listed on different exchanges, and it's freely traded. It's got a market cap, and of course, speculators are buying the token. And the theory of all this, promoted by their lead investor A16Z, the usual suspects, Mark Andreessen, Chris Dixon, this is a revolutionary Web3, an example of what Web3 can do that the regular web could never do, because it's incentives for ordinary people to bootstrap a network because they have ownership in that network. So that's kind of like the beautiful vision of Web3.
Right. So say I, as a everyday person who comes across Helium's website and sees the big, tagline, a people-powered network, and I find out I can make money off of this. How do I, an everyday person, get involved in Helium? Like, how do I start making money?
So the idea is that you need to purchase a device that's called a hotspot, which is also known as a miner, because it's analogous to a Bitcoin miner where you're mining the token, except the way to mine the token here is to provide network connectivity, right? So the idea is you've got that dog collar, right? It's a very low powered dog collar that can't use Wi-Fi, can't use 5G, and you're providing the LoRaWAN internet gateway for that dog collar, and as a result, you're earning the token, which is also called mining. So you buy these hotspot devices, but historically, in order to buy these, you had to pay $400 to $800, and you had to sign up for a wait list because the shipping times were very, very long. And also, you had to buy the miners from Helium, the company, or Nova is the company name, and the price represented a huge markup. So maybe the company was getting them for 100 and selling it to you for 500, and that was also supposed to go into funding the operation. So right off the bat, just by having you buy the miner, they're already skimming that way. So you buy this miner, you get on this wait list, and what you find is, unless you're one of the very, very first people to buy and get on that wait list, by the time the miner arrives, you're late in the game, and in the typical pyramid shape, you're suddenly find yourself on the lower rungs of the pyramid of miners getting into this.
Right, and I'm glad you brought up the pyramid, because as I'm looking at their website and all their marketing, I'm trying to figure out where the business to customer marketing is. Like, I'm trying to find out where this use case is, like where they are selling these products. Now, and again, for people, I don't want, right. I don't want to get ahead of myself here, so I want people to understand that Internet of Things, because it's going to come up a lot, and I'm not, this is an area in the tech space that I'm in no way, shape, or form an expert in, but Internet of Things are items like your refrigerator, when they can, newer models connect to the internet to tell you, I don't know, when you're running out of ice in the freezer or something like that. It gives you sort of updates like that involving the product. In the dog collar example that the investor in Helium brought up, it's so you can, track where your dog is, I guess, if they were to run away while wearing the collar, right? I'm guessing that's the purpose there. And so I'm looking for them selling this, but all I see is the selling of the idea that you can make money by becoming by owning one of these nodes and having one of these boxes in your house, or multiple boxes, because of course one box probably ain't gonna make you the money you want to make. And I'm sort of thinking, like, this is like who's using this other than, like, who is paying them other than the people who are buying this box so they too can make money, I guess, from these magical customers that I cannot seem to find them selling to on their website.
Yeah, no, I want to just repeat your insight, which is the website is not even trying to address end users of the network. You go to the homepage and it says people-powered networks, start a wireless revolution, so this nice, abstract idealism. And then it says, the next thing it says is mine. It's a new way to mine crypto, right? So they're pitching to the people in the network. And that's weird if you actually go expect to hook up your dog collar, right? If you're one of these hypothetical end users that are going to feed money into the system. But it makes perfect sense when you realize it's just multi-level marketing, right? So if you go to Herbalife's website, right, or Amway's website, similarly, they're not saying, oh my God, you got to buy these products, right? They're saying, hey, you should really sign up and own your own business. We're going to give you freedom. We're going to give you empowerment. They're already talking to you like, hey, here's how you go sell this thing to others. It's like, wait a minute. I thought this was, a product, right? So it's very much multi-level marketing where their entire focus has just been on how do we build up random people to go become these miners? How do they pay us that $500, very attractive profit margin on the miner? How do we get them hooked up to the network? And then how do we show all this token activity flowing around, and then turn around and go to the venture capitalists, go to Andreessen Horowitz and say, look, this is a revolution. Only Web3 and the blockchain has made this possible, when it's literally just Herbalife in Wi-Fi hotspot form. The website, even to this day, that they spent 99.999% of their time and focus recruiting, just like a pyramid scheme. And so it was a bombshell when we kind of looked behind the curtain and exposed that there's only $6,500 a month of revenue. It's like, oops, somebody forgot the demand.
Right, right. I think Herbalife is a great example. I usually use LuLaRoe because I feel like people are
Yeah.
familiar with it, do the documentary. But you know what? At the end of the day, even if you buy into the LuLaRoe pyramid, that you'll make your own successful LuLaRoe business, even if and when that fails, you still got some leggings you can wear. What are you gonna do with this box in your house?
Right. You're right. It's junk, and we're already at that point. So and just the timeline's a little bit weird because Helium, it's been growing and growing, and it's so funny that 900,000 of these junk boxes are now deployed, for $6,500 of revenue.
Wait,
But
hold on. I gotta pause you there because I want to make sure people heard what you just said because it's not something to say and continue a conversation with. How much is Helium making?
So yeah, so just to go through the numbers, the bombshell number is 6,500 US dollars per month, is the amount that the dog collars of the world, the forest fire trackers of the world, are paying into the network in order to transmit and receive data.
Okay. You must be talking about like one of those guys who bought like 10 of those boxes. They're making $6,500 a month, right?
Right. I mean, the number is the reason why the number is funny is because it's zero, right? It's not 6 million. It's a number that rounds to zero. And honestly, it's such a ridiculous number that I suspect it really is zero. Like it's really weird to think that like one person somewhere in the United States is seriously using it. Like it really is zero.
Wait, hold on. So I want to make this completely clear. You're talking
Yeah.
about Helium, the company as a whole. Like, it's not like you're saying like, oh, there's a success case out there where there's a guy who bought those Helium boxes and that guy is making $6,500 a month from Helium. No, no, no. We're saying that the company Helium, how much has been invested into them?
Right. And that's the contrast. So $365 million has been invested into them.
And they are making $6,500 a month.
Exactly. So they're making, one employee's salary, right? And of course, they have many employees, and again, it's just to contrast these numbers, 900,000 of these hotspots. And so when I say 365 million has been invested, that actually has come from VCs, and it's come from an ICO back in 2017. So about 111 million came from the ICO. So there were ICO speculators buying in, of course, A16Z has paid in more than any individual party. And then I didn't even mention on top of all that, another about 500 million on top of that has come from purchases of these hotspot devices, right? So the $500 devices, so close to 1 million of these devices has been purchased. And so that adds up to, I don't have the exact figure, but it's well over 250 million, probably something like 500 million. So we're getting very close in total to $1 billion of capital expenditure, right? More than half a billion, right? 700 million, like these crazy numbers of capital expenditure to supposedly, blanket the entire world in these LoRaWAN hotspots in order to one day recoup the revenue, right, from end users who need data. And so that's why it's such a bombshell when you look at the data numbers and it's like, oh, $6,500 a month.
Right. So you said that there's about like 900,000, almost 1 million of these boxes out there.
Yeah.
Do we know how many individuals have actually, because obviously there are people who would have bought multiple boxes to try to make this their like full-time income or their full-time passive income or an investment for the future or whatever they're planning. Do we know how many people have actually bought into this as a business opportunity?
I don't have the exact number because, as you say, people buy multiple, right? So if there's 900,000 units, then the ballpark amount of people who have bought in has got to be like 400,000, right? Say the mean is like 2.5 units per person, something like that. So we're definitely looking at many hundreds of thousands of people, of individuals. And so, and I think that's one reason that my tweet really struck a nerve on Twitter and got so many likes and shares, is because there's a lot of people who are, bitter. They're suffering in silence, right? They paid $500, $1,000, $2,000 to buy these things. And if they were in early, great. But the majority who weren't in early they're like, what the heck's going on, right? Which is, it parallels pretty much every story of a Web3 or a blockchain project that you'll ever hear.
Right. I mean, I saw someone actually reply to, it might have been a reply to your tweet or a reply to another tweet about Helium, but someone said that they actually did make a nice little quick return on investment on Helium by basically buying one of those miner boxes and then reselling them to someone who was on a waiting list. And then
Yep.
that's how they turned a profit.
Yeah, I
So, I
mean, look,
mean,
I can show you any Ponzi scheme, any multi-level marketing scheme, and you talk to the people who are early, right, who get out at the right time, and they're always like, "I don't see the problem. This was great."
right, and they didn't. That guy didn't even make it from the use case. He made it just by reselling the
Right.
box.
There's literally not a single individual in the whole world who can tell you the reason why I made money is because I helped somebody transfer data. That's just never happened.
Right? Do they have like when these approximately 400,000 give or take people bought into this as this this new business opportunity? Did they have a number in mind of how much they could make? Like, was Helium advertising even a range or something? How did they sort of sell this to them?
Yeah, so the implication, it's all subsidized, right? So it's like, just to take a step back, these Web3 VCs, I specialize in kind of analyzing the thought process of the venture capitalists, the way they think, because this is my industry, and I used to have a lot more respect for these people, like Mark Andreessen. I mean, the guy is considered one of the founding fathers of the original internet. He invented the first graphical web browser, right? He invented Mosaic, and then he worked on Netscape as the founder of Netscape, right? So this super smart, respected guy talking complete nonsense today about Web3 and crypto. So to dive into Mark Andreessen's thought process, he says something like, "Look, a network like Web3, it works because the token, right? Everybody's really excited about the token." Right. And then your question though is what was people advertised, right? Like what was their pitch? And so they would look at the market price and they'd be like, wow, I can make this much money if I purchase a miner, given the current price of the Helium token and given how much data is being exchanged right now, according to the stats, I'm expecting to make $100 a month. So it's okay that I'm spending $500 because I'm going to recoup this in maybe 5 months, right? And then the next 5 months, I'm going to make another 500. Like, this is very attractive, right? I can double or triple my income within
Right.
12 months, and this is passive income, right? And so you can understand why 500,000 people all around the world are jumping on this amazing passive income opportunity.
And
But
if you buy a few boxes, that could
yeah,
you might not even have to work if that can
exactly, right. Which, oh man, so it looks very attractive when that's how the numbers seem to pencil out. And going back to Mark Andreessen's thought process, he's saying like, this is how to bootstrap a network. Like we can make people get really excited to bootstrap a network even before there's demand. And in the world of startups, one of the hardest things in building a startup is to get initial demand. They call it the chicken and egg problem, right? Like which comes first, the chicken or the egg? They say which comes first when you're building a marketplace for internet? Does the supply come first, the hotspots, or does the demand come first? Well, let's take a sledgehammer, right? Let's cut the Gordian knot and let's just build up a bunch of hotspots, right? So the supply will come first and then the demand will come. So they think they're so clever that they built up 900K hotspots, and they think that it was only possible because there's a free market of tokens on the blockchain. But in reality, all they did was they just pumped an ungodly amount of money into the system. Like, yes, when you light, $1 billion on fire, you're going to get random people to do whatever you want them to do, even if that means building hotspots. Like, that's not a blockchain innovation. Like, anybody can throw money at anything and get it bootstrapped, right? So that's all that happened here. And then the problem is they were so focused on the supply side that the demand side was just non-existent. Like, nobody was checking on the demand side, basically. They're like, oh, we have some leads, like some people who might want this. Like, well, let's solve the chicken and egg problem and get to it. I mean, when you zoom out and look at this, it's just, it's just incompetent. It's inexcusable. But what made it okay, what made it raise so much money, and look the other way, was the Web3 narrative of it.
Right. I mean, that we've seen that, I think, time and time again. And I want to sort of dive in here a little bit more into the crypto aspect, because that is like how these these miners who have these hotspots, that's how they make their money. Like when we say they're making money, we have to, I guess we should really stress that, it's not like Helium is writing them a check and sending them like a royalty for the amount of data that went through their hotspot or whatever. No, they get rewarded. It's a mining device. They get rewarded for how much how much usage comes out of their hotspot in the Helium token, and that token seems to really have fluctuated quite recently. I mean, when it seems like its peak was in November, around the same time that Bitcoin hit its all-time high so far. Helium hit around $52.70 token. By the time Kevin Roos's New York Times piece comes around, hailing Helium as, look, crypto finally has a real use case, we're talking, it's already dropped to around, $27, $30 a token. And today we're now sitting at a token price of, it seems like it's currently going back and forth between $8 and $9.
Yeah, which is, and that's why, as I wrote on Twitter, pretty much everybody who's bought a miner, right, except the ones who got in early and made their money back, and the rest is gravy. The vast majority of people who have ever bought a miner, they haven't made their initial investment back, and their overall return on investment is almost guaranteed to be negative. So not only are they not going to make passive income, but it's very similar to most people who join an Herbalife or a multi-level marketing. They're out of luck. They're worse off for having dabbled in this.
Right. And here's, I pulled up this thread from just earlier today while we're talking, which is July 27th, Wednesday, July 27th. Earlier, there was a post on the Helium Network subreddit, the official Helium subreddit, over 100,000 members in that subreddit, ostensibly people who are involved in this or are looking to get involved and following for more information. Someone posted, "Is this normal? I'm making $10 a month, LOL." And the replies are, one person says, "If I made $10 a month, I would be happy. My city is just too overloaded with miners. I make about 3 cents a day. So yeah, $10 a month would be like winning the lottery." Another person says, "I wish I got $10 a month. I get like 10 cents a month. So I unplugged that piece of crap." So it seems like this is, and again, I'm sure from what it sounds like, some of these people are in, like they said, areas where there are a lot of other Helium miners who are, all competing, I guess, for this piece of the pie. And I guess depending, if you find like this great spot that's, I guess in a big city that doesn't have any Helium miners, you'll be rolling in some cash for a bit. Again, how much, I don't know. I have they ever like announced like what, like the LuLaRoe, an example from earlier, they would make like these videos of people who were quite successful, made a full-time income, had to hire help even, maybe hundreds of thousands, if not millions of dollars selling LuLaRoe products. Has Helium ever like touted a big winner in the Helium space?
They haven't touted a big winner, but they are actually pretty transparent about how much money everybody's making. At least the mean per miner. You can look up that stat on the Helium Explorer. But let me explain how to analyze, if you're thinking about buying a Helium miner, let me tell you what the problem is. So let's say you pay $500, maybe the price is dropping, but just historically you paid $500. And today, if you had a miner today, you're going to be making about $20 a month from the token rewards of mining. And that's assuming that the Helium token stays at $9, as you said, so it doesn't fluctuate too much. If you're lucky and it gets a pump, then you're going to make more money, right? Because you're tied to the pumping and the falling of the Helium price. So you're tied to that volatility. But assuming it stays at $9, and assuming you paid $500 and you're making $20 a month, well, after 25 months, you're going to make back the $500. So that's a little bit over 2 years. Now, if you're thinking about buying an income-generating business and the business owner tells you, yeah, this is a 2-year payback period, right? You're going to get paid back in 2 years, and then you keep making passive income. Well, that sounds pretty good, right? Because most businesses are sold in such a way that you get paid back after 3, 4, 5 years, right? That's a more standard payback period when you buy a business. But here's the problem. Remember the $20 a month, let's drill into that. Like, what is that $20? Because as we discussed before, the total amount of demand in the system of people who are actually using the internet, right, the dog collars of the world, right, whoever needs to connect to this network is non-existent, right? It's $6,500. You can't split $6,500 across a million different miners, right? Everybody literally gets a penny when you do that. So where's the $20 coming from? And the answer is it's entirely subsidized. So even that $20 breaks down into a penny, and then $19.99 subsidized. And so it's irrational to expect that the subsidies will keep pumping that $19.99 into your wallet. And so it's not really a 2-year payback period. You'd be lucky if you keep making $20 a month for 2 years. Chances are it's just going to zero, right? It's just like a it's a Theranos, right? Or it's a WeWork, right? It's just any company that is heading right off the cliff, and the only hope of saving it is if somehow demand comes in. They're completely lacking demand right now.
Right. And the idea too that like do we know like how much, like what gets you a Helium token? Like what is the amount of work your rigs have to do for you to even be able to mine a single Helium token?
I don't have the exact detail off the top of my head, but the fundamental concept is that there's people buy data credits off you. So when you help them transfer data, then they have to pay you in data credits, and there's a conversion rate between data credits and Helium tokens, and so you get awarded Helium tokens. So this idea that the end users who need that data are paying you the same way that you'll pay Verizon, you're paying AT&T, these dog collar owners are paying, they're paying these miners. But in practice, most of the tokens you're getting are for network maintenance today, right? So the fact that you're talking to other nodes being like, hey, are you online? I'm online. Great. We're both participating in this project of bringing the internet to everybody. So that traffic, that overhead traffic and communicating with the blockchain, that is where the $19.99 is coming from, right? And the only reason why there's any money, the only reason why there's somebody out there to pay you $19.99 is because the money is flowing down from the venture capitalists right now, right? They're pumping up, and it's also flowing down from the ICO, and it's also flowing down from random people who are like, you know what? I like this idea of this new internet. Let me also just speculate on the HNT token, and that money is also partly flowing to the miners.
Right, right. So also another thing to think of too, like say you are a Helium miner and you're one of the lucky ones based on some of these first-hand experiences we've seen online, and you're making, let's say you're even making based on current value of Helium token, $18, $27, $36 a month. You're feeling good. You have to, I guess, be doing this for at least 20, 30 months. The token has to not depreciate in value anymore. The use case has to, like, people actually use, like the companies or devices trying to connect or have to at least maintain the current level, if not grow. Also, you have to make, you have to cross your fingers that your $500 box is not going to just die and break, because that's another cost of doing business. This is, mining rigs, they processing power, lots of work. These things are on, I assume, 24/7. So, they're not going to last forever. So you have to factor that in. If you're lucky, I guess 2-3 years till you break even, maybe, and then good luck, I guess, hoping nothing goes wrong from there.
If I were holding on to a Helium miner right now, I'd really be looking to try to flip that, right, to anybody else who wants to get in for whatever price.
Right. And what is the Andreessen Horowitz, like Andreessen Horowitz, excuse me, when they get into this, like what are they getting out of it right now? Like, is this just like hopes for the future, or are they getting something right now out of this?
Man, it's really interesting to try to analyze Andreessen Horowitz because when you look at the Web3 space, there's two fundamental components to try to understand what the heck is going on in the Web3 space. So the component number one is what your listeners are very familiar with, which is easy money, right? It's so when you give people easy money, they will argue for you, right? They'll go to the ends of the earth, right, to get that easy money. But there's another factor. I mean, look, somebody like Marc Andreessen, the guy's a billionaire. The guy's incredibly successful, incredibly respected. He doesn't need to scam you. He doesn't need to nickel and dime you. So what's going on? Why is he tempted by easy money? And so there's another piece that you really need to explain what's going on. And I'm trying to coin a term. I call it hollow abstractions. So it's the idea of this nice sounding, even Helium used one, right? They call themselves people-powered networks, right? The network of the people. So that's an example of an abstraction. Like, what does that really mean? Oh, there's like no demand, but you pump the token, right? So it's the difference between a nice sounding abstraction and the specific meaning is actually like something very different, or in many cases, even nothing, right? So the idea of like all these things that Web3 can do, it's like, oh, Web3 can cause networks to be built when the network otherwise wouldn't have built. And then you drill down and it's like, well, why wouldn't the network otherwise have been built? It's like, oh, because nobody would have invested money because it's a horrible, horrible investment, right? Like that's the reason.
Right. Yeah, I was reading at this Kevin Roose story on this in the New York Times, and he brings up that Helium Network was founded in 2013, but in 2013 they didn't start as a crypto company. He says, and I mean that's obvious. No one was looking at crypto in this way in 2013. 2013 we're still talking the era of like libertarians thinking this was going to become like the currency for them to skirt their taxes. They still think that, but that was the sole use case really there, and also illegal activity. But 2013, no one's thinking of that yet. And then, like you said, there was an ICO down the line, and they start really getting into crypto as their business model. And Kevin Roose eventually lands on, could Helium have worked without crypto technology, he says. And he says, not really. The company tried the non-crypto approach, and it nearly went bankrupt. But adding tokens to the mix solves what technologists call the cold start problem. Now, I mean, I don't even think that's the case either. I mean, the crypto doesn't solve the problem, which is the core of what Helium is saying they're trying to do to the front-facing public. Like, what they're saying, like what they're billing Helium as, like people like me who are not looking for a business opportunity, I should know Helium as the company that powers the ability for all of my Internet of Things devices, my dog collars, my my refrigerator that's going to tell me how low my ice is in the freezer if I'm living up in the mountains, I guess, and have that fridge there because I have no internet connection otherwise. These scenarios, that's how I should know Helium, as that company that powers these things for me. But I don't know Helium as that because they're not succeeding at what they claim to want to do, because I hate to tell them this after almost 10 years of, banging away at it, but it seems like there's no use case for this. And so the crypto thing, just like I guess how Ukraine smartly figured out how they could extract some more money from very rich people who wouldn't give otherwise when they really needed to fundraise for the Russia's war in their country. They decided, hey, we're going to pretend you could only do this via crypto. And the crypto community said, hey, we're going to help out Ukraine, but for this reason only. Not really because of what's going on there for the most part, but because we're going to do it because crypto is involved. Helium seems to be following that model. Like they're buoying a non-existent space with the crypto advocates who are literally just getting involved because the idea of quick money or passive income, or honestly probably some people just doing it because they want to support anything crypto in hopes of crypto becoming more legitimate.
That's right. And going back to analyzing VC mindset, so I do, I am charitable enough to think that Mark Andreessen, Chris Dixon, Andreessen Horowitz, all of these, successful venture capitalists who are investing in crypto, I think that they're, to use a term that Balaji Srinivasan coined, I think post-economic, right? I don't think that they're driven by easy money. I think they have they're on a higher plane on Maslow's hierarchy of needs. And I think they're all about, they see themselves as these futurists, right, who really understand a tech vision. And what they're falling for is not a money scam. It's an intellectual scam. It's the idea of the hollow abstraction that, as Mark Andreessen calls it, they think that they're funding the next internet. So Mr. Andreessen, he was around for the first internet. Like I said, he built the first graphical web browser, and he's like, I know what it looks like when a new internet is coming along. I can recognize this. I can smell it. Now, if you go talk to the other inventors of the internet, like Vint Cerf, if you talk to Tim Berners-Lee, they're all like, no, Web3 sucks, right? So he's kind of the only inventor of the internet who's high on Web3. And I'm like, Mark, I'm sorry, you're 1 for 2, right? So you correctly called the first internet. You're incorrectly seeing an internet when there's no internet. But the reason why he thinks this is so great is because he's like, look, this technology, it's decentralized, right? It can incentivize people. There's tokens. The tokens are built into the technology. So he's seeing all these things that on an abstract level sound really good. But to your point about the Kevin Roose article, what really frustrates me is when people make these claims like, man, this could only happen because of a blockchain. The only reason these people got together is because of the blockchain. It's like, remember when you gave him 350 million? You think that might make them come together? Like, you think that might, trigger some purchases of hotspots?
Right, right. I mean, I definitely agree with you in terms of like the dynamic with Mark Andreessen, where I think power has a lot to do with it too. The idea that not only would he be one of the heads of this new internet, which for being for selling itself as decentralized, we're seeing a lot of the same names and faces behind a lot of these big projects being pumped. I think the idea of them, because this isn't really just a technology or new internet. A lot of this crypto, in a way that obviously Web 2 or Web 1 was never. This is also a financial in the financial space. We're talking about a financial system here, and I think they in my opinion view it as a way for them to be where the old money Wall Street types are, basically pulling the strings there. This is their opportunity to have that power in this new financial space that would be their domain, because it also exists in the tech world. But I have to ask you this. We didn't really get into this, but if you could, I do want to bring it up though. This is sort of a multifaceted two-parter question. Number one, what are security tokens in the Helium system? And number two, how much does Andreessen Horowitz have? Or do they get any?
That's a great question, because to that point, Andreessen Horowitz has been roundly criticized. They're not transparent at all about these kind of purchases. So the blockchain is known for being very transparent and open, but it's not open how many security tokens they hold. The way that the Helium protocol is designed is that you're constantly getting Helium tokens minted toward the security holders. So in addition to paying miners for data, there's essentially a skim. Right, so every time a year goes by and all this data has supposedly been transferred, right, to I use dog collars as the representation of the end user. All this data has been transferred. The miners are getting paid, but also 33% this year is supposed to go to pay the security token holders, which is kind of analogous to paying a company to run the system, right? So it's the overhead costs, and part of it goes to the bottom line, right, to the shareholders of the company. So there are a lot of analogies between how Helium works and how a regular corporation works. Now, who are the shareholders, right, who have this certain class of token that gets to skim 33% this year? Well, as far as I can tell, the founder of Helium, Amir, posted that 15% of that 33% is going to Nova, the corporation. So to use actual numbers, so 10 million Helium tokens are being minted this year for the shareholders, and 1.5 million of those is going to Nova, the corporation. Now, 1.5 million, you got to multiply it by $9 per Helium token. So roughly, you're talking about 15 million going to Nova, the corporation, and there's another 85 million that's being skimmed by other shareholders. When you think other shareholders, think largely Andreessen Horowitz, right? And the total skim is that 15 plus that 85. So there's $100 million being skimmed out of the network. And so just to zoom out and look at all the numbers again, so you've got 365 million going in from investors, and you've got 250 million to 500 million going in from ordinary folks who are hoping to make money. And then every year you've got 100 million coming out as pure skim. So the idea is like, well, don't worry about our 100 million. There's going to be another, 200 million. There's going to be way more than that in terms of revenue from people who are purchasing data, right? But then you look at the actual numbers and they're like, oh, there's $6,500 a month of people purchasing data, right? So they're siphoning money out of the system when nobody cares about this. They're not creating value for any end user. It's as if Verizon did nothing but sell hotspots. It's as if nobody used Verizon for data, right? So that's what's going on.
Right. So these very special investors and VCs who are apparently the ones making the big money out of this people-powered network, while the people putting forward the $500 for these mining rigs are working these rigs to the bone to make back their income, to make back their investment, I should say, in like 2, 3, maybe 4 years. I mean, I know Mark Andreessen's very wealthy, but it seems like there definitely is I can never have enough, I guess, for some people.
And just to put yourself in Mark Andreessen's shoes, you might wonder, like, why are they pumping these ungodly amounts of money? Like, and one reason is they have a 4.5 billion crypto fund, and so the money is really burning a hole in their pocket. You're just not going to find 4.5 billion of worthwhile crypto. You're not going to find $4 of crypto worthwhile, right? I mean, how do you invest 4.5 billion into the crypto? It's insane, right? But so they're like, yeah, sure, throw hundreds of millions at this. But when they're penciling it out, they're saying, look, we get to skim, right, 85 million. We get a big chunk of that $85 million, and so it doesn't matter what happens with these miners. Maybe it'll take a few extra years. Maybe it'll take 5 more years. Maybe by the time that 6,500 a month grows to millions, hundreds of millions a month, it'll take 5 years, but it doesn't matter because we're getting our skim and we're going to pay back our investment within 2 or 3 years, no matter what happens. And so it's a safe investment.
Right. Now, let's also talk about this really quick. I want to, I'm not Internet of Things, or even like how the airwaves and the 5G spectrum and all that works. But from my understanding, these mining rigs, these helium hotspots people are buying, they do use the user, like I don't know, the franchisee, I guess you call them. They do use their internet connection, right, to sell to other people to use, correct?
Yeah, you're saying like Verizon will let other people sell part of their network. Yeah, I think that happens. I'm not an expert.
Right, but as myself, as someone running one of these hotspots,
Hmm.
like when I sign up for
Well, you're talking
FiOS,
about like paid Wi-Fi at a cafe.
yeah.
Sure.
But like when I sign up for like my home Spectrum or Verizon FiOS or Comcast or whatever, I sign a contract, and in that contract, I can't resell my internet service. Isn't that sort of what they're like? How, like, I know you're not a lawyer or a legal expert here, but have you seen anything online in your research and going through Helium? Any concern, or has this come up at all in terms of like how legal that these 400,000 or so people who've bought these hotspots and letting other people pay Helium to use it?
It's a great question. Yeah, a lot of people have brought that up, and to my knowledge, I don't think the company has explained how that's supposed to work. But I suspect their vision is just like, look, we're going to make the technology possible, and then you'll work it out with your internet service provider. Like maybe Helium will be so popular that ISPs will just realize that people, it's a competitive advantage if they let you resell your internet, right? So they figure that's like a solvable problem.
Right. I guess the Uber model of just doing it until you have no, everybody else has no choice but to let you.
Exactly, or maybe ask for forgiveness, not permission.
Right. And so, what has been the response to because your thread, like, we're not talking about like, oh yeah, we got a few like in some circles, like this thing went viral. It was being I saw it being like cited and talked about from like legacy media publications like Bloomberg. I saw people from reporters from Bloomberg talking. Have you? Like, what was the response? Like, have you gotten a response from Helium or any of its investors?
Yeah, so the founder of Helium engaged, and he said, "Hey, Liron is it's great that he's being skeptical and asking these questions, but he doesn't get that there's a vision, and actually we're about to do a new network for 5G. So don't worry about LoRaWAN. That one is it's going to take more time, but there's a whole new network where you have to purchase different hotspots, and we're going to do a 5G network." And that's kind of their next act. It's a little bit of a Luna 1, Luna 2 situation. Like, look, Luna 1, okay, yeah, you're losing all your money, but look, there's Luna 2. So they're doing that with 5G. And the founder also said, well, Liron was a little bit inaccurate on the numbers. He said that we skim 30 million tokens, and we don't quite skim that much. So, okay, fair. Yeah, I mean, the numbers were me kind of piecing together estimates, but there was never a number that I was that wrong on. And he actually admitted that the 6,500 a month was accurate. And again, that's the bombshell, right? There's no way to sweep under the rug that you raised $365 million and you're making 6,500 of revenue. And it's been a while. You started the company in 2013, and there's no, there might, you might imagine like, well, what's the excuse? Maybe he can give an answer like, oh, don't worry. Like, we're going to flip a switch in 6 months, and that $6,500 is going to turn into, 20 million, right? Like, don't worry, we've got this. And the first customer is going to be Amazon, right? And they're going to use this for like delivery, like a device that helps you. Like, you can imagine they have a story, but the funny thing is they have no story. They cannot name who is the customer. So they really just threw this out into the world and like, look, the demand is going to come, projects are going to come, it's going to organically evolve. And it's so crazy, and yet it's a pattern that I see in startups. Not in startups that are funded by 365 million, but on a smaller scale, a startup that will be funded by 3 million or 5 million, and they'll be like, look, we're building this piece of software. We don't know exactly who's going to use it, but eventually somebody's going to use it. And so I've actually made it my specialty. If you ever look at my blog, bloatedmvp.com, it's about all kinds of startups that aren't even crypto startups that are suffering from the exact same mistake where they build something, like if you build it, they will come. And like people are going to come after we build it. And it doesn't work, but it especially doesn't work when you rope 900,000 people all over the country into making a hotspot. Like then it fails on an even more massive scale.
Right. And I saw in that, I think either the one of the investors or the Helium CEO himself, I saw in the response to you, he brought up, I know we already mentioned like the dog collars and a few other things, but he specifically mentioned most recently in that his response in the past few days, that there's a company apparently using their network to create like these stickers you could put on anything to track whatever you want. And I'm thinking like, well, number one, you've just recreated AirTags.
Right.
Apple does that. And there's another company that did that even before Apple. And then number two, even Apple, a huge company, had to literally be like pressured into doing something about all the nefarious use cases where people were using it to actually using AirTags to actually stalk like women and other people. And I'm going to trust this, like this random, like, I don't think they're thinking about that use case. Are they going to do anything about the stalker use case? But it's bizarre to me that, this is probably what we're going to hear for a long time from Helium and other crypto companies that, this has been the case throughout, this tech startup world, especially like since like the social media Web 2.0 era, where tons of tech startups come without any revenue. Some of them even don't really have a long-term vision, and they're constantly pivoting. But we saw VCs pump money into those companies, and they failed. So why is it such a big deal when it happens here? And I think there's a huge difference here. Like when a company like, say, I guess Facebook or Twitter, and obviously not Facebook or Twitter because they're still around, but a company like that failed in the Web 2.0 space. Yeah, it would suck. People would lose money. People who were, not investors or executives, they would lose their jobs. Sure, that stuff, that's real pain for people, of course, sure. But here in this aspect, with crypto and Web3, when a Web3 company fails, the pain is not going to just be within those people who joined the company and knew that, I'm in a tech startup. I can lose my job after, say, a few months, a year. This is the space. I know what I'm getting myself into. When a Web3 startup fails, the people who are going to be hurt, and it's going to be financial for them in a way that it was never in Web 2.0 spaces, are the users and the consumers and the customers. Because even like, let's say like I bought a VR headset and that VR headset company failed in a few years. I would have still bought a product, got a use out of it, my $200, $300, $400, whatever it cost. I got my use out of it. It was $300 well spent if I had fun with the headset or whatever. I have it still to, whatever. If a crypto company fails, there is no product the consumer has that they used and enjoyed or utilized in their everyday, life that made their life simpler or whatever. There's no product there. There's also not like, I just joined a free social network. It failed. Oh, well, on to the next one. The customer, the user, the consumer here are technically really investors themselves, again, which is why a lot of this stuff is really securities. And we should be getting the SEC in here looking at Helium and other companies like them. But that's why I think this space is so like predatory in a way that we've never seen in any of these like Web 1 or Web 2 companies before.
Yeah, and just if we zoom out, I mean the picture here, it's stunning the difference between the hype and the reality. Like if you look at what is Andreessen Horowitz, this $4.5 billion crypto fund, their crown jewels were Helium and also Axie Infinity. I'm sure you're familiar.
Yeah, I did an episode with Ed Zitron on Axie Infinity when they got hacked. I mean, a lot of people were using that, and that one really hurt people in developing countries, marginalized people who honestly don't make that much money and were literally almost honestly like indentured servants in terms of how like the Axie Infinity scholarships worked, where you worked and had to share your earnings with the person who actually owned the Axie Infinity NFT character, because the entry for people in like the Philippines, for example, was so high they could never get involved without having to go work for somebody else to play a video game. I mean, literally, we're talking about you had to go work for somebody in order to play a video game. I mean,
Exactly right. So when you zoom out and you look at, how do things look, the way things looked a year ago was, the prices were pumping, and the thought leadership coming out of Mark Andreessen, Chris Dixon, all the crypto VCs are like, this is a new era. Look at Axie Infinity. This proves we're onto something. Look at the Helium network. These are amazing use cases. Like, let's watch what happens. And what happened in both cases is just we're making people poor. Like, we're just roping in victims, making them poor, and then it crashes and they either need more money or they go bankrupt. It's like, how many times is this going to play out? The reason it keeps playing out is everybody's like, well, let's look somewhere else, right? And so it's like there's all these air bubbles of like, hot air bubbles that's like, from my perspective, like, as a crypto skeptic, I'm like, listen, you're not going to find something here because there's no fundamental reason to believe that putting a blockchain in something, right, or incentivizing people with tokens in a way that you can't do with equity shares in the old world, there's no reason to believe that these things are any different or any better. But because the hype has like taken root, right, it's like you can't go back. I can't go back to a world where people just forget about blockchain. Just forget it. It was a bad idea. Like, just never bring it up again. They're all like, no, I have to bring it up. Like, can't do this. Can't do this. It's like, no, it can't do anything, right? So it's like, how many times are these different schemes going to come? And so not only do I have to go, okay, this idea is dumb. You also have to do it with individual people, because everybody's pointing fingers. They're like, look, I don't know what I'm talking about. Okay, I kind of have an idea about what Web3 is, but I'm not the expert. Right. And I know that's something that Packy said after he did his interview, where, I posted a clip of him where he had a lot of trouble saying, how do NFTs help you get a better mortgage on the blockchain? And he didn't know. And he's like, look, at the end of the day, I'm just a guy. I'm just an observer. You really got to look at the smart people, right, who know what they're talking about. And so the next clip I did was Mark Andreessen. I mean, how does it get smarter than Mark Andreessen? He's a really smart guy. And he was absolutely stumbling to tell Tyler Cohen how, what is Web3 good for when you make podcasts. He was absolutely struggling because he doesn't have a coherent picture of how Web3 helps podcasts. So everybody's pointing fingers at individuals. Everybody's pointing fingers about projects. It's like, guys, give it up, right? Web3 is just a hollow abstraction.
Right. This, I came across, just to, I guess, put a cap on how ridiculous this is getting in terms of like what Web3 is. I came across recently like a new, one of those software as a service apps where you set up your profile and people can go there to like book a time to like meet with you, and you don't have to get involved and exchange emails, like Calendly. That's a big one in the space. Right. And I came across a Calendly competitor that is promoting itself as like a Web3 version of Calendly. And I'm like, oh, what is the Web3 aspect here? Why would you need to put your friggin' calendar booking on the blockchain? To get angry at someone if they cancel and prove that like, oh, look, it's on the blockchain. I mean, you don't need a blockchain even for that, but okay, that's what you want. No, the Web3 aspect of this new Calendly competitor was that basically when you use it and make a booking, you earn their token. And I'm like, what? You're just first of all, your token is worth nothing. And second of all, you're trying to incentivize people to use your app by paying them in your worthless token. What is like that? That's what we're going to see, I think, ad infinitum here. We're going to see.
You're going to be doing this in 20 years because no matter how bad blockchain is, there's always going to be people who are like, you know what? What if we do this with a blockchain? That idea is just never going away. No matter how bad it is, we can't kill it. It's an unkillable zombie idea that's going to last, outlive us.
Right. Liron Shapira, an entrepreneur, angel investor, crypto skeptic. I want to say, first of all, thank you for coming on this show. And second of all, I think that someone where you are in the tech space, speaking so loudly about this stuff, we don't see enough of it. And I don't know if they're worried about bothering certain people, or if they're actually all just that into crypto that they don't want to publicly, or they just don't want to publicly, say anything. I think it's important for someone like you to be out there doing it. And there's only a few. I mean, there's very few crypto skeptics that are out there publicly doing it anyway. But to have someone like you doing it, it's really important. I mean, except for the feelings on Mark Andreessen, I think we're on the same page on pretty much everything.
Yeah, absolutely. And I'm fortunate enough to be in a position where I'm uncancelable, right? So I'm not worried that I'm not going to pay my bills if a particular person gets offended. And so, look, I got to make the most out of this, right? And so I'm saying what I really believe.
Right. And I hope you keep doing it. I hope you'll come back on this show to talk about, I mean, there's literally a never-ending supply of things to talk about. I hope you'll come back on.
Yeah, I would love to.
Isn't Web3 just fantastic, folks? I really don't know what more to say. I'm actually also on, very little sleep because I had to literally do everything you just listened to, and the piece that published in Mashable was literally all put together in about a 36 to 48 hour time frame. So I am, quite frankly, exhausted. So to wrap things up here, go to patreon.com to support this show. Your paid subscription literally will help break more news in the crypto, Web3, NFT, scam economy space. Cannot do it without the listeners as a whole, the viewers as a whole, but I definitely cannot do it without my patrons. Your support is greatly appreciated. It helps me spend more time on this show, Scam Economy, on my other reporting work, on my other journalism work, on my other podcasts and shows like Doomed. So really, if you can, patreon.com/Matt Binder and subscribe. You can also subscribe to the YouTube channel at youtube.com/Matt Binder, which doesn't cost any money. And if you watch the live premiere of this episode, you can drop a super chat. If you watch the video replay of this episode on YouTube, you can drop a super thanks. Those are one-off donations as like a thank you. You can also go to twitch.tv/Matt Binder, follow the channel there. And if you're an Amazon Prime subscriber, connect your Amazon Prime account to your Twitch account, and you get a free Twitch Prime subscription every single month. It's basically free money for you to give to your favorite Twitch creator. I hope that's me. That's why I'm mentioning it. But even if it's not, definitely use it. You get it free from Amazon every month. Doesn't cost you anything. Don't let Amazon walk away without sharing their money that you pay them with your favorite Twitch creator. And of course, scameconomy.com for all the links to the podcast version of the show. And please leave a review on Apple Podcasts and Spotify if you haven't already. It helps push this show up the Apple Podcast and Spotify charts, which in turn helps more people find out about the show. Follow me on Twitter at Matt Binder, and basically search for me on any social media platform, Matt Binder, and you'll find me. And that's it for this episode. I'll see you all next time on the Scam Economy.